Good morning. Today I'm going to show you three markets. The first one is US 10-year bond yields once again. Then I will show you a couple of charts on Euro Stoxx 50 and FTSE MIB index. So focus on European stock market indices. If we start with US 10-year bond yields, this is a very long-term chart since the early 1980s. You can see here the long-term regression line, which is in the middle of the chart, and above and below this regression line, these are -2 here and +2 standard deviation around the regression line. So the big question right now is: are we going to have a major trend change, which means the end of a major bull market on on US bonds, which started in the early 1980s, or is the pullback around 3% a major buying opportunity on US bonds? Right now, I mean, we are at the critical juncture between these two scenarios, because the yields are challenging the upper part of this regression channel, which means that yields are right now more than 2 standard deviation above the long-term regression line. So we have two possible outcomes to this pattern. The first one is we start to see a mean reversal after an excess to the upside, which is exactly what happened in 2006-2007 here. It was a major buying opportunity for US bond yields. Or the alternative case would be the end of a 30-year bull market on US bonds, which means that we are going to break above 3% and probably move significantly higher. So right now, critical juncture, obviously, which shows that the timing is quite difficult to anticipate, because we can have a pullback below 3%. But on the other hand, I wouldn't bet on a revival like what we saw in 2008, 2009. I think that a strong decline from current level is relatively unlikely. Why? Because if I look at the long-term point and figure chart, so this is a 0.005 times 3 box size, what I see right now is a breakout above the upper part of a major base formation already. So we have just made this upside breakout. So breakout above the upper part of a wall. This is called a wall in point and figure charts. And as you can see here, I have huge upside targets on US 10-year bond yields, which means that the risk in the medium term is now on the upside. So if you look at targets, the first target, so the minimum target is 3.5%. But I think that in the long term, US 10-year bond yields can go easily up to 5%. Now, if I make a focus on the European stock market, so I don't comment US stock markets, which continue to trade sideways inside a very complex trading range. European stock markets are obviously stronger. As you can see here, there is a critical juncture on Euro Stoxx 50 in the Eurozone, which completed a daily perfectly set up 9 sell. The last time we had a setup 9 sell, it was in late February. So what happened in March is renewed weakness. So the big question is, are we going to have a similar signal or not? And as you can see here, the index is also challenging its declining 200-day moving average. So two technical tools are telling me, okay, be careful, the Euro Stoxx 50 could be at a critical juncture right now. And we see that obviously since a couple of days, the market is reluctant to break above the 3,500 area. So critical juncture in the short term on Euro Stoxx 50. Are we going to have a new decline like in March? I would say it's not so clear, because if I look at the the point and figure chart on the Euro Stoxx 50. What I noticed this week is an upside breakout on point and figure, following a successful test of the internal rising support line, which is this line. So this is the first bullish signal according on point and figure. So this is 1% time 3 box size. You can see the box size here. And so first bullish signal of the year, suggesting that one, the long-term trend is still bullish because the index is still trading above its ascending support lines. And the fact that we have a double top buy signal right now is not very negative. So it's possible we could have further side retrading, a pullback below 3,500, but I wouldn't expect, I don't have enough technical elements to anticipate the start of a significant downside correction. One of the strongest index in Europe is Italy, so this is the FTSE MIB index. I commented this index 2 weeks ago to highlight that there was another daily setup line sell signal. As you can see, the index continued to rise pretty strongly and in straight line over the last 2 weeks. And is now completing a combo 13 sell, so another contrarian signal. Given the fact that the first setup did not really trigger a significant correction, it will be interesting to see if the combo 13 is this time able to trigger at least a short-term pullback. What is quite interesting here is that it is the first Eurozone index to move back around late January highs. So the 24,000 area is a big resistance. Why is it a big resistance? If you look at the long-term chart, this is a chart I showed several times since last year. The FTSE MIB is obviously challenging since a long time this key horizontal resistance zone. I think in the long term we are going to see a breakout. There's no doubt that the upside potential is quite significant on this index. I think we are going to see a breakout. So to get the long-term target, you have to report the length of this major base formation to the upside. So this the long-term upside potential of this index is pretty good. But right now, as you can see, it's a bit like on US 10-year bond yields. We are at a critical long-term juncture. So are we going to see a breakout right now, or are we going to see a pullback before a breakout? This is something that is not very clear. So US bond yields and Italian stock market are obviously two charts to monitor in coming weeks. Thank you.